seek to focus on issues of capacity constraints or capacity enablers, to look at it positively. We seek to focus on the quality of the service we provide to original equipment manufacturers, and we seek to focus on the efficiencies stroke costs of the service that we provide to the manufacturing sector. We are going to be looking at energy and logistics and unlock all the bottlenecks, to unblock the bottlenecks, to ensure that decisions are taken quickly.
Now, the aim of this forum is to obviously facilitate growth, and you have established strategic partnerships. For example, if you're looking at Transnet, that is moving away from road to railway, what are some of the objectives or initiatives that you've put in place?
There is a project ongoing, which is a year old, between NAMSA and Transnet, which has been working on designing a customized wagon for the automotive sector. Now, that project is quite advanced. I think we should be able in the next few months to make the announcement about this type of wagon. It's going to require, among others, that we therefore look at the available balance sheet at Transnet to be able to meet these requirements, because once you've completed the design of the wagon and it's been approved by both parties, you must now look at the production. It's going to create more work at Transnet Freight Rail. It's also going to mean that you need to have more locomotives that are dedicated to this particular sector.
What type of timeframes and costs are we looking at for implementing these projects?
In terms of the market demand strategy of Transnet, you already have 200 billion rand over the next 7 years dedicated to expanding our rail capacity. And in instances where some of these projects can't be supported or funded through the Transnet balance sheet, we are committed to looking at unlocking the balance sheets of our customers and suppliers, which might mean that we develop models of public-private partnerships.
We're looking at growing the manufacturing market. I mean, what are some of the incentives that potential investors can look forward to?
South Africa is investing 330 billion rand into energy capacity over the next 5 years. We're investing 300 billion rand into logistics capacity over the next 7 years. And we are in discussions about our export tariffs and cargo dues so that we make them competitive.
You're looking at growing at a rate of 6 to 7% over the next 10 years. Is this attainable, and especially taking into account our macroeconomic environment?
It is attainable. There is a lot of work that we need to do in order to realize 6 to 7% GDP growth per annum on a sustainable basis over a protracted period. That would involve the steady implementation of the infrastructure rollout program. It would involve the private sector upping their investments into the economy so that the 500 billion rand investable capital which they are sitting on at the present moment, they shake off their uncertainties about the domestic market and invest more.